European stocks have been doing rather well of late, and that's partly in response to what's been happening in the US, but it's also a spillover from a very buoyant American market and money looking for returns from other places and obviously avoiding emerging markets. And so Europe has been a good place to put money in, which had been a laggard and in its own right has bounced back after COVID. We're getting to the stage now where we're anticipating obviously some kind of pullback in the US, which will have a knock-on effect on European stocks. And therefore we are tactically shifting more towards larger cap, lower volatility companies. Strategically, we are still in companies which we find attractive based on valuation, so their profitability relative to their share price, revenue growth, year-on-year dividend yields, cash flow generation, consistency of outperformance of the market, and strong average returns. Okay, but tactically, increasingly in anticipation of a market pullback, it's not cash we go into because we're not trading in and out of cash, but remain fully invested, but tactically more towards those larger cap, low volatility companies because they will most likely be the flight to safety ones. They'll be the ones which most likely money will move towards.